After swinging between gains and losses through the day, benchmarks are closed in the red for a fourth consecutive day, making it the longest losing streak in nearly a month. Geopolitical disturbances keeping investors on edge. Sensex dropped 448 points from the day's high to end below 57,700. Nifty too was unable to hold on to the 17,250 mark, down 69 points at the time of close. Broader markets also in tandem suffering huge gashes, with the Nifty small cap down 1.5%. The Nifty and Sensex were dragged by metal, realty, power, pharma, utilities majors, Hindalco, UPL, Divi's, Adani Ports and Sun Pharma among some of the worst hit. Banking stocks lent some support along with some IT names: Wipro, Infosys, Shree Cements, Power Grid, HDFC Bank. On the other hand, newly listed tech platforms are in free fall. Paytm and Nykaa today hit fresh 52-week lows, investors losing more than 1,30,000 crores in less than 3.5 months. Our global business editor Udayan Mukherjee joining us now. Then constant pressure on the markets. I think a third, fourth session now that we're seeing consistent selling, even though it wasn't so deep today, but nonetheless the volatility continues. Is this primarily the threat of war that's causing some amount of jitters, or are there other factors at play?
Oh, there are many factors, Abha, but of course the war situation is the one which is the most immediate for all markets, including India. But I think the key thing is the volatility, because the last time we spoke, when I was in the studio with you, we were talking about volatility between days, intra-week, which is 500 up one day, 500 down the next day. But the way today panned out, we started looking quite scary in the morning with the Sensex down 400 odd points, and then we came back into the green for quite a bit, and then we collapsed again towards the second half of the day. So it's not just intraday volatility, but even intraday volatility, which is picking up quite significantly. So I think the market is basically repeatedly pounding against that 17,000 floor for the Nifty. And there is quite a bit of buying which is happening around 17,000 Nifty. A lot of people are trying to defend that level. So the market keeps bouncing back from that level. But at higher levels, as you pointed out, there is that inevitable supply of stock which also materializes. The market's not able to get above 17,300, 400 quite consistently. So I think we're trapped in a bit of a narrow trading range with extreme volatility. And I don't know how this will end, but my fear is, my suspicion is that this repeated pounding against that 17,000 floor might actually give way, and we might go back and retest the recent lows and maybe even find lower levels. This kind of volatility often has the habit of actually leading to a breakdown in the market rather than a breakout. So time will tell, but it's going to be a very interesting session. And the other thing I will point out is that the broader market is looking even shakier. Even at the points of the day where the Sensex and Nifty are clawed back into the green, the mid-cap index continued to remain in the red. So I think there is pain in the broader market which is deeper than some of the heavyweights which we're experiencing at this point. So we'll see over the next few days whether this support at 17,000 and this periodic bounce back is actually value buying which is emerging, or it's actually distribution happening at every pullback level. So this is a very interesting phase in the market, but I think we'll have resolution in the next couple of weeks or so.